The Adani Group withdraws the 20,000 crore rupee Adani Enterprises FPO after a sharp fall in share prices. Group Chairman Gautam Adani says withdrawal is in the interest of shareholders. Bonds of the Adani Group too fall in value.
IDFC receives 4,000 crores from the stake sale in AMC. It will also invest 2,200 crores in IDFC First Bank for around 3.5% stake. 1,760 crore rupees will be given out as dividends.
Britannia reports a strong operational performance in the third quarter. Margin expands to near record highs while the company continues to gain market share for the 39th straight quarter.
ITC's rally continues. The stock is rallying after the duty hike on cigarettes comes in lower than expected.
Whirlpool's correction continues after a weak third quarter. Profits fell 74% while margins contracted over 350 basis points in the quarter gone by.
Hello and welcome to Chartbusters. Well, it's earnings season and there are plenty of companies that have reported numbers. So let's get straight to that. GE Shipping, well, it saw its third quarter. They reported a good revenue growth of close to around 50%. The profitability as well was up by close to around 200 points. There was also strong expansion in margins. To understand the way ahead and what's gone on in the past quarter, we're joined with Mr. Shiv Kumar, the Executive Director and Chief Financial Officer of the company. Hi, Mr. Shiv Kumar. Thanks so much for joining in, sir. Well, give us an update first. China is reopening. What kind of an impact has it had? If you could give us the updated rates on your crude tankers, your product tankers, as well as dry bulk. What are the numbers out there?
Good morning, Nigel. Yes, China is reopening. However, it's a little early because we've just come out of the Chinese New Year week. Probably we'll start seeing action now. It was too early because this year Chinese New Year was a little earlier than it was in the last couple of years. Once we get out of that and get back to business as usual, then we'll really see the impact of the Chinese reopening on the commodities markets. So far, it hasn't had any significant impact.
So which way do you...
On the dry bulk market specifically.
Do you want to give us a couple of numbers, Mr. Shiv Kumar? The updated numbers out there on all the three verticals that you normally talk about?
Yeah, so the dry bulk spot rates are still weak. So we are below $10,000 a day across the board in the spot market, current spot market rates, whether it's Supramaxes or Kamsarmaxes or Capesizes. So they're still pretty weak. But again, this is always a weak quarter. So the first quarter of the calendar year has traditionally been the weakest quarter of seasonally. So its dry bulk is low. Product tankers have come off significantly. Again, January is typically a weaker month than December. We saw very strong December 22, and product tanker markets have come off since then. They've come off quite a bit for the larger ships. Again, we'll await the reopening and see what happens. Crude tankers are still pretty strong, slightly lower. So crude tankers, which were probably peaked at about $65,000-70,000, are probably somewhere around $45,000-50,000. But again, this changes a lot on a day-to-day basis. You can take this as this is what it is today. Tomorrow might be very different, $10,000-20,000 different.
And product tanker, you said the rates were what? Because dry bulk is below 10,000, crude tankers around 40 to 50,000. Yeah.
So the product tankers are somewhere around $30,000 a day, which were probably in the 45 to 50, or probably around 30,000. The larger product tankers, which went up quite spectacularly in December, they went up to $75,000 a day. Those are probably somewhere around $15,000 a day. Again, we have only two of those. So ours are more the mid-sized product tankers, which are that 45,000 coming down to 30,000 kind of now.
But in either case, they're all above, way above your break-even price as well, right? Because gas tankers had about 16 to 18,000 per day sort of break-even. Crude had about 12,000. Dry bulk and product had around 10 to 12,000. So what sort of numbers can we expect in the fourth quarter of this financial year? I mean, that's what we want to understand, because what's happened in the third quarter was something that people could extrapolate given the rates that they were. Now, is the outperformance of the third quarter likely to sustain going ahead, given that the rates have come off a tad?
So we don't know what the rates will be. We don't give earnings guidance because, and one of the reasons is because we just don't know. As I said, we don't know what our ships will get fixed at tomorrow. It might be $20,000 higher or lower. All I can tell you is these rates which I mentioned are lower than they were for the average of the last quarter.
Okay.
As the rates are today, so the less than $10,000 a day is lower. The average bulk carrier earnings across the 14 ships that we have was about $16,000 a day in last quarter. Right. Currently, they are below $10,000 a day. That's a spot market.
Okay.
In product tankers also, on average, we are below what we averaged in the last quarter. So that's sort of what I can say as right. It stands today.
With the China opening itself, you said it is early days right now, but given your experience in this industry, what sense do you get, the rates, which way these rates will move? We understand that they're lower than the average that we saw in the third quarter. And do you think that these levels will sustain at lower levels, or can it move higher?
So, as I mentioned, this quarter is traditionally a weak one for dry bulk. However, going forward, you should have strength. So last year, we saw a 4% negative growth in world steel production. Unless you have a really significant recession across the board, with China not coming and China doesn't come back strongly, you should have steel demand growth, which is the main driver of dry bulk carrier demand growth. So you should have earnings improving from here. However, it's all down to demand, and it's still early to say about China, and because we don't have the data yet. Probably by end of next month, we'll have some data on the fixtures which are happening, cargoes going into China, but not yet.
Okay. All right, Mr. Shivkumar, let's talk about your offshore vertical. It's a smaller part of your business, 22% odd. That's seen a good turnaround, actually. And there's a bit of an update out there. Maybe it's led by oil drilling as well. And I'm looking at it, for many quarters you reported an EBIT loss, but that turned around. What's the outlook on this vertical itself? For the past quarter as well, it was in the red, but I don't know whether there's a seasonal aspect that plays out over there. Going ahead, you're expecting this to continue in the profit train. Even in the last fiscal, in fact, delivered a negative number on the EBIT front. But that could be the delta. If it turns around, then there's a swing in the earnings. Go ahead.
That's correct. Yeah, your reading of it is correct. What's happening there is that it's not a spot market, linked business. So these are contracts, typically 1 to 5 year contracts, typically around 3 year contracts. So when it goes down, when the market goes down, our results go down slower than the market because you have the coverage that you have at the old rates. Similarly, on the way up, though the market is much stronger than it was a year ago, so the recent pricing that we saw is about twice the last pricing that happened for that kind of rate. So it is 2x the pricing of N21 for a 3 year contract in India for a rig. Vessel rates also are up between 50 and 100% for new pricings. However, a lot of our capacity is locked in. One rig comes off contract in this year, one of our 4 rigs. That rig has got priced up by 75% on the previous rate. And that will only kick in sometime late in this financial year. The current contract goes on till mid-2023. And by late 2023, she should go on to a new contract at a higher price. So this will filter through the results a little slowly. But the trend is in the right direction.
And when do the other 3 contracts, when do the other 3 rigs come off contract?
Yeah. So 2 rigs come off contract in calendar 2024.
Okay.
And both of them, of course, if you just do an MTM to the current pricing, then the rates are much, much higher than the rates at which they are operating.
All right, take that point.
But those will only affect FY25, late in FY25 results.
All right, Mr. Shivkumar, thank you so much for joining in and giving us all those details. Wish you good luck for the remainder of the quarter. Importantly, remainder of the year as well. As you said, that no one knows anything, but we hope that things will get better from here. With that, we'll step into a short break. But as we do that, here's some exciting news. The most coveted leadership awards are back. CNBC-TV18 honors the visionaries behind outstanding businesses. Catch the most influential, credible, powerful IBLA jury on February 8th, right here. Back here watching us here on Chartbusters. The market continues to wobble around. The mid-cap index is doing well. Let's talk about one of the stocks, other companies rather, in our on our radar right now. It's Spandana Sphoorty, where we did see strong growth in their disbursals. The AUM grew by about 18.5% quarter on quarter. Let's get chatting with the management. We do have with us Mr. Shalabh Saxena, who's the managing director at the company. Thanks a lot, Mr. Saxena, for joining in. First up, just wanted to understand what exactly went down during the quarter, because your disbursals, while they were up 70%, the AUM was up just around 18.5%. At the same time, we saw sharp capital consumption. I mean, your CRAR was down from 45% to 39%. Were there write-offs? Were there top-up loans? And what's the outlook on credit costs going ahead?
So, thank you and good morning to you. We have, when we started the year, we had laid out a strong plan for the next 3 years, which carries right until FY25, where we had projected that we are going to take the microfinance book to 15,000 crores. This quarter, obviously, this entire year for that matter, has been a bit of a consolidation. So we have been trying to get all the gears working, and that's the reason why we've been working both on the disbursement side as well as on the quality of the portfolio side. This quarter, obviously, we had about 19% growth on the AUM. To your specific question in terms of the CRAR, we are well capitalized. Our balance sheet is pretty strong for our plan right until FY25 of 15,000 crores plus 3,000 crores, 18,000 crores. We will be in the range of about 24-25% CRAR, which is much above the regulatory limit. So at the same time, we have a clear understanding with amongst all the stakeholders that at any given point in time, when we start looking for growth capital will be when we are around the 24-25% CRAR mark. So balance sheet, in my considered opinion, is not what kind of bothers us. It is ensuring that the company is back on track. We are able to deliver good quality growth.
I take that point,
at the same time.
My specific question to you was, what were the write-offs during this quarter?
There were no write-offs. There was a write-off which we did in Q1, which obviously was about 700 crores. We took a hit on the provisions, etc. Post that, there has been no write-off.
Okay, all right.
Apart from the standard BAU.
Okay, all right. Hi, Mr. Saxena. Well, give us a couple of other details then. What's the kind of growth you're looking at? And also, since the cost of funds would be moving up, what kind of a margin or NIMs you could guide for going ahead?
So our cost of funds, marginal cost of funds went up a bit over the previous quarter. But however, we are still, there's a background for the past 2-3 quarters. We've been trying to stabilize our book. So we've kind of now, we are holding on to the cost of funds that we've been delivering over the last quarter, a slight increase of about 0.02%. Our expectation is that we should remain in this range and probably go down, and I'm cognizant of the fact that the market and the environment is at a higher rising interest rate regime. But given the fact that we were already a step ahead because of the background, I think we are good as at this point in time. Our mix from the banks currently contribute about 55% to our overall borrowing. This we want to take it up to 75%, which will lead us or which will ensure that we are looking south as far as the borrowing costs are concerned.
So what kind of guidance can you give us for NIMs and credit growth?
NIMs, we've projected we had a 13.8%. I think anywhere around 13.5 to 14% is a number that we will hold. And from to your earlier question in terms of growth, when we came out with our Vision 2025 plan, we had projected 30%, 25 to 30% growth. I think we are holding on to it because there are identified geographies where we have started our growth plan in terms of opening branches, hiring people, etc. So at this point in time, we are pretty confident that we'll be able to deliver the numbers that we had initially provided.
Shalabh, earlier there was word that maybe Spandana Sphoorty is on the block and there are some buyers looking at it. Now that you've come up with a 2025 sort of plan, should we assume that those things are off the table and you are at least on board to growth for the next couple of years and the current ownership will stay?
So, two answers to your question. The point that you raised in terms of on the block, this is quite some time back, almost about a year and a half back. as far as the current story is concerned, every shareholder without exception is behind us, behind the management. All of them are, we took them through the Vision 25 plan. All of them are completely in sync in terms of how to take the company forward. And at this point in time, as an organization, we are completely wedded to the plan that we had rolled out.
Okay, all right. Final question then before we let you go. We just got done with Budget 2023 and it seems it's taking India in the right direction. What's your comment on it? And also if you could tell us, how does it help your business?
Absolutely a very good business, very good budget. I mean, we've been tracking, or at least I've been tracking budget for quite some time. If I were to summarize in a line, I would say that this is a budget which is actually trying to bridge the divide between the India and the Bharat. The rural India is what it focuses on. It has been, but this time it is more pronounced. That's number one. Number two is in terms of the infrastructure growth and the way the entire focus is in the investments. What it does, we are a microfinance company, about 90% rural. So what it does is it brings the adjacent markets closer to our customers. A 60 kilometer, 70 kilometer few years back is not a distance at this point in time, which then expands the market of our customers, and hence obviously that incremental bump up when it comes to their incomes, and hence direct impact, positive impact to us as a company. So the biggest take, if you were to ask me, apart from the other things, there are a lot of things in the budget, but in my view, from our customer segment perspective, see, microfinance is a large industry. It's about a 3 lakh crore industry, contributing about 2.2% to the GDP, generating about 1.2 crore jobs. So, so all of that, and then another flip. So yes, as an industry and as a company, I think we are in good hands.
All right, take that point. Thanks a lot, Shala, for joining in and giving us all those views. We look forward to the 25 to 30% growth that you're guiding with 13.5% to 14% NIMs. And importantly, we will watch out for any developments with regards to the ownership change as well, which you have said that is not on the cards right now. Take a short break, come back, get you more of them back. The volatility for the market continues. The Nifty, while it is off highs, it is also off lows, sitting with a cut of almost 41 points. The Sensex is a marginal outperformer, and that's primarily because HDFC Life is not a part of the Sensex 30. HDFC Life is actually down about 4%. It's a part of the Nifty itself. Importantly, we're seeing some big moves in the FMCG space. Britannia has now moved to the high point of trade, and with that move, it's actually moved to a fresh record high as well, 45.86 on that stock. Strong performance coming in, 51% jump in their operational profit led to a margin improvement of almost 330 basis points, led by gross margin improvement. ITC is the other stock which is powering ahead for the FMCG index today, and that's on account of gains continuing from yesterday post-budget after the tax hike was less than what the street feared. And importantly, we also have ITC numbers tomorrow. In fact, over the last, in yesterday and today as well as tomorrow, we do have a bunch of FMCG companies reporting their numbers, so we'll keep an eye out on all of them. With that, we are out of time on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.